Did you know that 93% of small business owners overpay in their taxes? And on average, it's $12,000. What would you do with an extra $12,000? Is it go on that luxury vacation you've been eyeing? Is it finally hiring an assistant? Is it actually paying yourself a salary for once? Like, what would you do with an extra $12,000? I know when I work with my client, after we did an intensive working with her and we uncovered a $24,000 tax savings, she actually invested that entire amount into advertising. She went on to triple her revenue in that year because during the process where I actually went through and analyzed her tax situation, her business formation, things like that, that a lot of times people miss, I actually went through and uncovered $24,000 of savings that she was able to now invest back into her business. And this is why you are going to be wanting to continue to watch this video because I'm going to share with you some of the top 3 to 5 things that I see most often that small business owners just are missing. And it's costing them on average $12,000. Now, I just shared with you my client, it was costing her $24,000. And so if you're thinking, oh wow, that might be me, go ahead and you want to just keep on listening. So that way, in case you find that you may fall into one of these traps, you stick around so you can figure out, okay, I got to get out of that. But hey, I'm Alex Davis. I've spent over 13 years in the financial and tax industry space. I'm a CPA and a certified financial planner, and I've seen it all. I have seen some real horror stories. And this is why this video is so important because we're in a day and time where you need every dollar that counts. And it's not about just today saving $24,000, like in my client's case. In the span of 5 years, that's over $100,000. And in her case, she was actually able to take that $24,000 that we saved in 1 year, invest it back in her business in a strategic way, and she went on to triple her revenue. And so this is why, because 93% of small business owners are overpaying their taxes, that means they're giving their money to Uncle Sam and not back to themselves, their business, their family. No, that won't work anymore. So go ahead and stick around so that way you know what not to do. And so one of the things that I see most frequently is failure to actually have proper bookkeeping. There are errors in the bookkeeping. I remember working with a client and I was going through their books. And because I have conversations with my clients, I actually get to understand what are they working on, what is happening in their business, their finances, things like that. When I went and looked at their financial report, their profit and loss, so wow, this seems really high. And on the flip side, and I'm using some jargon here, I looked at their balance sheet and I said, wait, something's missing here. You know what was missing? Their bookkeeper had classified $100,000 as income when it was really a loan proceed. And you say, well, why does that matter? It would have cost them an extra $30,000 in tax because they were in a 30% tax bracket. That extra $100,000 that was reported incorrectly would have cost an extra $30,000. Luckily, I caught it, and that wasn't the case. But I tell you, over my 13 years of experience, every single time I've done one of my intensives or I've talked to a client, we've worked together, there's always some level of bookkeeping errors. Some may have been a $30,000 error, others may have been $1,000 error. But the bottom line is when your books are not in order, when your profit and loss statement isn't correct, when your balance sheet, when there are mistakes on that, that adds up and can cost you significantly. So we have to make sure that the bookkeeping is in order. When that bookkeeping is not in order, it's going to cost you money. Another area that I see so frequently is missed deductions. So many missed deductions where, and we have to think about it. When you have a business, there are certain deductions that you can take. But oftentimes, you're not aware of what's deductible versus not. And unless you want to go down the rabbit hole of researching, can I deduct this? Can I deduct this? And not only can you deduct it, but how are you supposed to properly document it so the IRS can't come in knocking on your door saying, hey, you took that expense for that travel, but prove to me that it was actually deductible. That's another area I'm able to support clients and saying, okay, this is the deductions that you're eligible to take. This is what you need to actually document. So they can't come in and say, nope, that's not deductible. But if you don't know what you don't know, I remember working with a client, and again, I'm going through doing my thing, looking at understanding what they're allowed to take, getting an understanding of what they're spending their money on, like what's actually leaving their bank accounts, and what are they using for their business. What are the activities they're doing within their business? Like, can any of these things be deductible? Over $20,000 of expenses not reported that were actually legitimate. They could document it, all the things, but no one asked. They didn't know to include it because they didn't know it was deductible. And it wasn't until I started asking more questions and letting them know what was allowed. They were like, oh, I have this expense. I have that expense. I have this other expense, to where we realized over $20,000 of deductions that they didn't take. And so that's another area that costs business owners so much. Remember, we said 93% of small business owners are overpaying in taxes. Well, if you don't report all your deductions, that's counting as your income, and you're going to pay tax on that. And so that's one of the reasons. And so we have to really be mindful of, where's your money going? What are your types of expenses? What are you actually legitimately allowed to take? And having a thorough understanding of that, so you are not overpaying and not actually documenting and reporting deductions that are allowed, because that can be costing you tens of thousands of dollars a year. Oh, okay. And I'm laughing because this is the one that I probably see the most often. And it's really, really, it's heartbreaking because there's so much noise out there of, okay, I'm an LLC. Should I make an S election? Should I be a C Corp? Should I be all these things? And the answer is always, it really depends on you and your financial situation. Understanding what type of entity you are already to begin with, because sometimes you don't even know. Understanding what are you eligible for, and does it make sense for your business, your types of income, your type of expenses, your long-term goals with your business, thinking of taking all these things into consideration. It can be a lot. And if you're not actually having conversations where you're having this discussion to figure out what's going to work best for you, this is when the hiccups happen. I shared at the top of this live that I work with a client, and after one intensive, I found $24,000. She then used that same amount of money to triple her income. So, oh, I'm still here. My camera just went off. But she used that to triple her income. And it was because she was in the wrong entity structure. Well, she had some other stuff going on. But one of the biggest ways that I found the extra $24,000 in her savings was she was in the wrong entity type. She had been filing as an LLC all this time, not recognizing that, oh, there was a better, more effective, tax effective way that also met all her other goals, but no one had told her this. So working together, she was able to save $24,000. So it's super important that you actually understand, what is your entity type, and is it maximizing your tax savings, but also meeting your other goals, because you should never just switch entities based for tax savings only, because that may change. So you want to actually have a thorough understanding of, are you in the right entity type, and why is it the right entity type? Does it make sense for the long term? Does it make sense for how long? Like, you need to understand that. And because we were able to sit down and I was actually able to analyze everything, we uncovered that, oh yeah, she needs to be in this different type of entity structure. 5 years, $100,000. What would you do with an extra $100,000? Maybe buy that investment property you've been sitting on, finally purchase your own home, expand your business, like all these things that you could be doing with this extra money. And that brings me to The next error that I see so often is not having a strategic tax plan. It has to be strategic. And by strategic, it can't just be minimize all your taxes, write everything off. Because this is what happens when that's the plan. Just write everything off to save taxes. Yeah, you won't pay as much in tax, but you know what else you won't get? You won't qualify for lending and funding. You won't be able to leverage other people's money to actually grow and expand your business because guess what? Banks don't loan to businesses that don't make money. They just don't. They're not gonna loan money if you're not showing income. And so this is why it's important to have a strategic tax plan where we are actually looking at what is the activity in your business? What type of deductions are you eligible for? What type of credits are you eligible for? How can we leverage your entity structure to make sure that you're maximizing your benefits? Are there retirement options that you can be contributing to, retirement plans? Like what can we leverage to minimize your tax, but also make sure that we're setting you up for the future and your goals that you are desiring with your wealth building? That takes being strategic. And so that's an area that you definitely want to make sure that you are being mindful of, because I see this so often where clients have come to me and they have previously been working with individuals who their strategy was reduce all their taxes. And that doesn't work. I remember working with one of my clients and they had been zeroing out their income for all these years. And I said, well, it's not looking like you're making income. And we actually went and looked and noticed that, oh, wow, they were writing everything off, things that were not actually allowed. And so I actually had to sit down and work with them on really understanding what their actual income and expenses were. And we were able to get their financials up to date. And they were actually able to go and qualify to buy their first home, because prior to that, it looked like they weren't making money, and that just wasn't the case. It was just poor strategic planning. So we have to be really mindful of making sure that the plan is not just write everything off, whether you can or can't, and saying we're tax planning. That's not tax planning. And the last thing that I'll share with you today is making sure that you are doing things above board and understanding what that looks like. Just recently, during one of my intensives, I was working with a client and they legitimately had losses in their business, which was fine because they were earning over $500,000 in their W-2, and their side business was they were working to generate a profit, but because they were putting in so much investments in the front end of their business to really set it up to be able to scale once they retired from their corporate. But the problem is there's what that's called a hobby loss rule. And if you don't actually document properly that, yeah, I've had losses for multiple years, but this really is a business, the IRS can come in and say, you know what? The $30,000 that you said was a loss, that was actually a hobby. You can't take a loss against that. They would have called all that back. And so because I recognized this and I was able to let them know, hey, we actually have to document certain things. So should the IRS ever come in and say, hey, no, 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 these losses aren't allowed, they would have had to repay all of the tax savings. But sometimes you don't know what you don't know. And there are other things that I find often where clients just don't know that this is a requirement they have to document. And once they become aware of it, they're really able to take a breath and realize, oh my gosh, thank you. That could have cost me tens of thousands of dollars. And it really does. It adds up. And those are just a few areas that I see when I'm going through my intensives and making sure that you're reporting things that you need to report. You're not losing money because you're not taking deductions. Your bookkeeping is out of whack. You are keeping your money. Okay. Those are the things that you really have to be mindful of. I just want to take a quick look at my notes because this is so important because I've just been seeing it so much. I've been working with clients on these intensives during this fourth quarter, which is a great time to really take a pause and look at your finances, look at your business finances to make sure that you are not part of the 93% of people who are overpaying their taxes on average by $12,000. This is the time to take a pause stop the hustle and make sure that you are positioning yourself to keep more of your money in your pocket, but also make sure that you are above board and checking the boxes of the things that need to be checked. So the IRS can't come in and cause you stress and aggravation and all the things because something wasn't done correctly. The IRS or the state taxing authorities, because that's a whole nother area I haven't gotten into. I've shared with you a lot of stories about the financial cost that it could cost when you don't have these things in order. But think about the emotional toll. Like, it's really emotional when my clients come to me and they have a $40,000 tax bill that they haven't paid and they don't know how they're going to pay, and they're losing sleep at night because they're thinking the IRS is going to come and snatch their assets, take their home, take their cars, losing sleep, stressed, hair falling out. The emotional toll of not knowing that you're missing these things, it adds up. It really, really, really adds up. And so if any of these you're like, oh wow, this could potentially, like, I don't know, I might be missing these things. My invitation to you is to get with a professional, whether it's me or if you have someone in mind that can support you, and just going through and looking and seeing, okay, what's missing? What can be improved? What's working? The time is now. So like I said, if you know someone, perfect. If not, my invitation to you is to snag one of the seats. I offer intensives where I actually go through these main areas that I find the most costly mistakes. And we actually go through and identify, are you making one of those mistakes? And how costly is it? And more importantly, how do you fix it? It's cool to know what it is, but how do you fix it? So that way you are not up having sleepless nights because you don't know when the IRS is going to come knock on your door, where you're no longer hiding, not wanting to open your mail because you're like, oh my gosh, I here I am getting a notice about this payment that I owe again. And the reality is, maybe you don't even owe the money, because we just established that 93% of small business owners are overpaying their taxes by $12,000. You may have a $10,000 tax bill right now that when we actually went through and looked at what you were allowed to deduct, maybe look at your entity structure, looked at these different things, you may not owe that money. This is why it's so important to go ahead and get the support now. So I want you to imagine waking up, drinking your coffee, and just like, wow, knowing that there's no outstanding tax bill, knowing that you are documenting everything that you need to, so that way you're not sending Uncle Sam a penny more than he needs to get. You're able to use that extra money to finally hire that assistant to where you can actually take that vacation and actually be on vacation and not checking emails, going all crazy. What would that be like? What would that do for you? Because my clients feel so much peace of mind knowing that, man, I'm good. I'm great. I'm not stressing about these things. So I have a few spots for Q1, starting at just $2,500, ranging up to $7,500. You have the opportunity to get back, on average, we're just saying just on average, that's $12,000 a year, $120,000 over a 10-year span that's coming back to your household. This is just on average. My personal clients, I save them typically about $21,000 when I do these intensives. Finding those errors. But getting that peace of mind is completely priceless. And so if that is you and you're like, oh, wow, go ahead, shoot me a DM, just DM me strategy. Let's talk. Because what I don't want you to do is go into another year with this as an issue.